Hi guys, it's your guy here, the unknown, and today we're gonna be talking about something important. We're gonna be talking about the steps that make a good trader. Okay, I'm gonna give you a couple of steps that I also followed. Okay, so this is gonna help you if you are new to the industry, or else if you have been in the industry for quite some time but not seeing the results. Okay, so this is gonna come in handy for you. Okay, so one thing I want to say is that I always follow the process. And if you have been following me for quite some time, you already know that I am strict when it comes to the process. Okay, I remember someone once said, "I'm too disciplined." It's not like I'm too disciplined; is that I follow the process, and that's what matters to me. Okay, so the process is very important, and today we'll actually be looking at how you build your own process. And the reason I'm doing this is because most people find it difficult to actually replicate something somebody is doing. Okay, and it's, yeah, that's how it should be. It's not easy. You're not going to replicate everything somebody's doing because they have their own years of experience. They put in a lot of work. You don't know how many years they've been in the industry, or you don't know how many years of failure they've actually had. But one thing I can guarantee you is that everybody in this industry has had their own share of failure. Okay, everybody has had their own fair share of failure and pain. Okay, it is in pain where you grow. Okay, so let me show you something. When we come to businesses, there are two different kind of businesses. There are businesses where like the graph goes like this. You don't have to invest a lot, you don't have to put in a lot of work, you don't need a lot of capital to invest into the business. It just grows straight like this. Okay, and I will show you. Say for instance, if you are building websites, your client pays deposit. You use that deposit to buy the domain, to buy the host, and to design the website. It doesn't matter whether you're coding it, whether you're outsourcing, whether you're using WordPress. It doesn't really matter. Okay, the client pays everything. You don't need a high level of skills, more especially if you're going to be using WordPress. Okay, your client pays deposit, you use their deposit, and after delivering their website, they pay their remaining balance. Okay, so this business is stress free. You don't have a lot of stress. Okay, but when it comes to the trading business, it's like this. It starts by going down. That's one thing you have to understand. And I've heard many people who are actually on this journey here complaining like, oh, my trading is not picking up, my trading is like this, I don't think I'm gonna make it, I don't think this and this and this and this. Okay, everybody in this industry, unfortunately most people won't tell you this. Okay, but the truth is, trading is like this. This is the kind of business it is. It starts by sloping down, and then over times the graph picks up and it goes straight. Okay, so everybody has had their fair share of this stage. Okay, they have gone through this stage, and most of the people you see now are now on this stage, but they don't show you that they've gone through this stage. You don't see the years of failure, you don't see the years of pain, you don't see the years of tears, you don't see the years of all the bad things when they wanted to give up, all the things they went through. Okay, but honestly, trading is like this. You're gonna start by going down before you go up. Okay, I know how it's portrayed out there on maybe social media, Instagrams, and all sort of stuff, but it's not really portrayed in the right way. Okay, because it is really like this. Okay, it starts by going down before it goes up. Okay, so that's something you must understand. Okay, it's highly important. Okay, so this is why today we're gonna be going through building our own process, because most people are actually trying to replicate, to do something somebody is doing. That's why they'll say do lives. If we can see you entering, then it can. No, you cannot replicate everything somebody is doing. Okay, you have to have a setup. Okay, and a setup is a strategy. Okay, and your strategy must have an urge. Okay, because you can't come to the market and decide, oh, today gold is gonna fall, and then you start selling gold. Oh, today gold is gonna go up, and you start buying gold. That is simply guessing, and guessing is gambling. Okay, so that's what makes the difference. There are people who are gambling, and there are people who are trading, and they are in the business of trading. Okay, so if you really want to separate yourself from the rest, you must be in the business, and you must have an edge. What is an edge? An edge simply means, like, for instance, if you have a setup, say for instance, okay, on this channel we have the three reversals. Okay, and yes, we have criteria. They must give a snake bear pit, or they must give a bull killer zone, okay, and then they must give an engulfing candle that shifts the zone from trap volume. I will explain this going deeper, okay. So that is the setup. That simply means on day threes we are expecting reversals. However, the criteria have to be met, okay. So let's say we have the bear snake pit, okay, and then now we are expecting a reversal to the upside. What are we waiting for? We were waiting for them to complete the bear snake pit, which is trapping, and then we want to see them giving an engulf that breaks out and shift zone from everybody who's trapped down, okay. So let's say this setup happens 10 times. By the way, the data reversal is this setup I have on the playbook, and right now I'm adding the second setup, okay, which is the most explosive trading strategy for indices. I'll be done in roughly a week or two. Just give me 2 weeks, and then I'll be sending everybody the updated version of the playbook, and later I will add the day two continuation. The reason I'm starting with this explosive kind of indice trading strategy is because I've seen how much results it gives. It happens almost every day, so you're gonna benefit a lot from it, okay. That's why I started by it. I'll add the day two later, okay. So when you're talking about an edge, we talk about, say for instance, we are looking at the day three reversal kind of strategy that is in the playbook. If you need the playbook, it's in the description, but I'm gonna send you an updated one in a week or two, okay. So let's say this okay, the day three happens 10 times, okay, happens 10 times, and they meet all our criterias, okay. We have the bear snake pit, okay, and then we have the engulf that shift the zone, okay, from every trap trader down, okay. So let's say it happens 10 times. Of course, this is a signal for a buy, okay. Let's say out of 10 times, it happens 10 times, show up 10 times, everything fully met, and then we take it 10 times, but out of the 10 we win 5, okay, we win 5 trades, okay. So that simply means, let's say this one has a win rate of okay, let's say the win rate is roughly 50%, okay, because of course if it's happening roughly 10 times and we're getting 5 wins, that simply means we are doing what? That simply means we have a win rate of 50, okay. So this is a very good kind of setup, and it has an edge, okay, because out of 10 times it delivers 5 times, okay. This is very good and it has an edge. We know that out of every 10 trades we are going to be taking, we are going to be winning roughly 5, okay. So this is an edge. You don't want to be guessing. You want something that replicates itself, happens over and over and over and over again, and you take the same thing over and over and over and over again, and you know that out of 10 times it's going to deliver 5 times. And now what you're going to rely on is actually your risk reward RR, okay. Say maybe you have a risk reward of 1:3, just for example, 1:3. So then you know that, okay, for every $100 you risk, you are actually gonna be targeting $300, okay. So now, simply because your strategy has a win rate, or a win rate of 50%, that simply means you're gonna lose 5. So it's gonna be 100 times 5, guys, okay. That means you're gonna lose $500, and you're gonna make 300 times 5, 3, 6, 9, 12, okay, 15. So this is gonna be 1500, okay, $1500. You see, this is winning, okay. That simply means out of 100 trades you're gonna take, you're gonna win 50 and lose 50. So you can see, even with 50 losses, you still at a very big win. So when it comes to trading, the most important thing to realize is that it happens over time. We are not interested with quick wins or things like that, okay. It's not about making $500,000 in a day. No, it's about growing. Why? Because one thing I love about slow growth is the fact that you're growing in experience, okay. If now, say for instance, you are using a lot size of 0.1, or you are using a lot size of 1, that simply means in the next 5 years you're not going to be using this, okay. In the next 5 years you'll be using roughly 50 to 80 lot sizes, okay. Why? Because your confidence level is growing, okay. You are gaining confidence in executing your strategy, okay. Your account balance is growing, okay. So your experience level is growing. Okay, so it's about the long term. Okay, it's about the long term. You are growing slowly, but you are going to be a completely different person in the next 5 years. So it's not about speed or something happening very quick. It's about something happening over time with patience, because one thing that can be faked is experience, and experience is actually the most important thing. Because one thing I will say is most of the people you are learning from have actually been in the market for the longest time. Okay, their experience level is so high, they are using bigger lot sizes. They are no longer struggling with entries. They see entries immediately. Why? Because they've been doing the same thing over and over and over and over again. Imagine even you, if you imagine how you'll be after 5 years, and it's going to be 5 years of doing one thing over and over and over and over again. You can see that you are going to be a completely different person, taking a very big lot size, because your confidence level has grown, your account has grown, everything has grown. So it's not something that's like, it's not a short-term thing. Okay, it's not a short-term thing. Okay, so it's about the long term, the person you'll become. Okay, so yes, of course, I believe now you understand what an edge is. Okay, so I'm not saying you should follow setups on this strategy on this channel, but if you don't have a setup, if you don't have a strategy, I have a playbook. It has the strategies. Okay, it is in the description. Okay, and I've a lot of videos talking about different kind of strategies. Okay, the reason I love the playbook is because there's only one setup that if you focus on, whenever it presents, you take it, then it's gonna actually help you over time with confidence, because the most important thing is confidence anyway. Okay, and now once you have a setup which has an edge, and when it comes to an edge, please know that it's not about if it's happening 10 times you're going to win 10 times. No, we don't care about the number of wins. We don't even care about the number of losses. As long as we have at least 5 wins over time, for every 10 trades we take, we have 5 wins. That's more than enough. Even 4, it's enough, because there is no system that will give you 10 out of 10. Okay, when we talk about the best systems in the world from the best people in the world, okay, we are talking about roughly a win rate of 60%. Okay, because the market are designed in that way, and I'm going to show you in a minute. Okay, I will show you in a moment. So now after you have developed your strategy, you don't have to develop it from scratch. You can follow any strategy, but just make sure it's something you understand. Make sure it's the easiest one. There are people who try to overcomplicate this. I don't know, maybe you want like your friends to think like, oh, you are in an industry where like the IQ is important. No, the IQ is not even important in this industry. There are people who want to overcomplicate this, use like very difficult statistics, use very difficult mathematics. No, that's not even important. Okay, because I've seen many podcasts where people are asking, oh, you're a trader, that means you know a lot of maths, blah 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 blah, and people saying yes. It's not about knowing maths, it's not about knowing stats. No, it's about having the most easiest setup for yourself, keeping things easy, because you're going to be doing the same thing over and over and over and over again. Hence why I always say, and you're still going to hear me use this word, I focus on the process. Okay, I'm going to show you a whole week of the most explosive trading strategy for indices. I'm going to show you where it has happened almost every day, and the process I focus on, just to show you what you really need to build in order to build a system. So now you need to build your own entry and exit strategy, something that works for you. Okay, yes, of course, there are people who will be saying, I do a live. Maybe if you do a live, we'll understand entries are very hard. We are struggling with entries and entries and entries. Everything is about entries. Well, here's a simple way to get your own entries. Okay, because you must develop your own entries, something you understand. And okay, right here I've shared with you this tool in my recent video, backtesting like a pro. This is soft forex, soft fx. Okay, it's a market simulator. As you can see here, it has you set up your own budget, you choose how much you want it to start with. Okay, but I always prefer to make it realistic. Okay, and then here you can choose your own lot size, and here you can put your stops and your take profits, and you can choose like they have their own data. You can download data from maybe 10 years. Okay, and backtest starting from 10 years. Okay, so it's all about how much work are you willing to put? But please bear in mind that the graph starts by going down. That means you're going to be investing a lot, maybe capital. If not capital, you're going to be investing a lot of time and a lot of work into backtesting. I told you I prefer backtesting more than 4 hours each and every day because I have my own time, okay? And I spend most of my time backtesting. That's something I really enjoy, okay? So you can choose everything. As you can see, this is Dow Jones, and this is 2021, roughly October. Okay, so one thing I do with this is already I have a setup, and this is what helped me. Okay, it really helped me when it comes to my interest and my exit. That's why most of you will actually say, oh, you explained this better, thank you for explaining who and whose concept in an easy way to understand. It's not about explaining somebody's concept in an easy way that is easy to understand. No, it's about learning. I told you, you need a setup. You can learn the setup from somebody else, okay? But you need to add something to make it work for you, make it something you understand, okay? So that's what I've done. That's why most of you think like, oh, I explained somebody's concept in an easy way. No, it's not about that. It's about you adding something that works for you, or omitting what doesn't work for you. And you'll only do this when you put in enough time into backtesting, into understanding what is really transpiring every time. Okay, so I use this tool. What I will do is I will set, okay, I will put the speed very high, and I will just play it. Okay, and as I'm playing it, you see the candles are playing because uh this is 2021 October data. Okay, so once I will speed it like this, for instance, I'll speed it. Okay, let me speed it, because when it comes to this to indices, I trade the most explosive trading strategy for indices. Okay, that's what I trade. Oh, unfortunately I messed up. Okay, and you can see I didn't put a stop loss. Okay, it's fine, because this is for the example anyway. So one thing you can see is you can run your chart. What I do is I run my chart when it gets to the equity opening time, because that's the one I'm trading. I can just put this on real time. Okay, and every tick will be in real time, or else I'll just lower my ticks to 111. That simply means all these ticks will be happening in real time. So if I'm gonna be uh trading this session maybe 3 hours, you know that okay, our sessions are roughly 3 hours, but for indices I prefer 4 hours. Okay, because sometimes they are actually moved late. Okay, so I'm actually gonna be sitting for 4 hours waiting for the trade to happen. Okay, and I'm gonna be using real time, so every candle will be running as it would in real time. Okay, so if it's a 1 minute candle, it's gonna take 1 minute for it to open and close. If it's a 5 minute candle, it's gonna be a 5 minute candle in real time. Okay, so that's where I'm able to actually decide on my entry criteria, what I understand, how I want to enter, what should the triggers, okay, what will trigger my entries, all the criteria. This is how I was able to develop all the entry criteria. Okay, that's why sometimes you think like, oh, this is explained in a simple way to understand. No, it's because I've actually used this tool to actually do something I understand, make sure I have my own entry criteria that I understand better, entry criteria that are easy for me to follow, entry criteria that like everything is easy and easy for me. Okay, so I have the link to this tool in my description. It's, guys, it's a very important tool for those who want to be backtesting, because you have to develop your own entry criteria, exit criteria. You can't replicate something from somebody, and this is what's delaying most people. People think like, okay, we have to do exactly what this person is doing. You can't. Why? Because some people have been doing this for 20 years. Okay, and you are still on your first year, on your second year. You can't replicate something somebody has been doing for 20 years. They already understand their entries, their exit, like they see them in no time. Okay, they no longer have fear, okay, of taking the entry. Or what if I'm wrong, what if I'm right? They've been doing the same thing for way too long, and their experience and their confidence levels are so high. Okay, they know that okay, If I take a loss, it's okay. If I take a win, it's okay. You still have to go through all these things, but you want to replicate what somebody is doing. That's gonna delay you. Okay. The only way to get this maybe on a silver platter in a very simple way is if you have a mentor who's fully dedicated to you, a mentor who is there to help you and you and you and you. Okay, you send him or her your trades, she or he reviews them and gives you feedback. Okay, when you do something wrong, they hold you accountable. That's the only way you can replicate something somebody is doing. But unless you have a mentor who is dedicated to you full time, you must put in the work and find something that works for you. Okay, find something that is easy for you, find something that works for you. Okay, so this simulator will actually help you a lot. Okay, it will help you a lot, a lot, a lot, a lot, and I mean it, because you will buy, you will sell, you will have everything here. You'll have your budget. You can see if you blow it, you can just reset, start with another budget, and then your goal is to grow it and then to come up with entry criteria that work for you, exit criteria that work for you. Okay, this is just being honest. Okay, and once you are done with this, what you will have actually is you're gonna have your own set of rules for entries and exit. I'm going to show you the set of rules I use for the most explosive trading strategy for indices. And guys, I will put it in the playbook. Just give me roughly 2 weeks, okay? Because it's a lot of work to put that thing in the book, okay? And once you have this, the third step to follow is actually uh, to trade it in real time. But before you go to real time trading, one thing you should do is develop a playbook. Okay, if you read, there's a book called The Playbook by this guy, the founder of SMB Capitals, which is a real problem, not these problems. Okay, the real problem. Okay, it's his name is Mike Bellafor. The Playbook. If you read that book, it actually takes you through building your own playbook, because you need to have your own playbook. You need to know when your setup is in play. Okay, you need to know when your setup is in play. You need to know when your entry criteria is actually reached. Okay, you need to develop your own playbook, and I know I have my own playbook. It's in the description. That playbook is to help you, but I know sometimes it might be hard for you to replicate what I'm doing. Okay, because I have done the work and I have actually put in the time. Okay, I put in a lot of time into doing this. Okay, so you might actually have to build your own playbook that has your own kind of rules. What do you look for an entry? What or how do you exit a trade? Okay, because for me, usually I focus on 50 pips. Do you know why I came to a conclusion of 50 pips? You Okay, you don't know why I came to a conclusion of 50 pips, but it came through trial and failure. I always say this. I used to target more pips, but one thing I realized is, oh, they will go 60 pips, sometimes 80 pips, sometimes yes, they'll go and hit maybe my 150 pips target. But you realize that out of 10 trades, they only go and hit your big target one time, and then the other times they will come back and then close you. That means you lost everything you made during that trade, and you lost your own capital that you risked. Okay, because if you make 100 pips or 90 pips, maybe you have a target of 100 pips, they go 98 pips. All that capital is yours, but it's not yours until you realize it, until you lock it. So if they come back, maybe you have a stop, or you have risked 20 pips, and they went 98 pips. Now they are coming back and they are hitting your 20 pips. You didn't just lose 20 pips, you lost 20 pips plus 98 because they were yours. Okay, and I've read this other book which says it's much better to, or wiser, to lock your profit when the move is still strong, because if you're gonna wait for it, or if you're gonna try to squeeze out every pip the market gives, then before you know it, they will correct roughly 40%, and now you'll be forced to close with low profits than you had made before. Okay, so you might have to develop your own playbook. Once you have put in the work, once you have understood your own entry criteria, once you have understood your own exit criteria. For the setup, yes, you can use any setup. it's gonna be very hard for you to develop a setup from scratch. Okay, so it's advisable to learn setups from anyone. There are hundreds, or if not hundreds of thousands of setups out there. Just find one setup. Okay, one setup. I know most people try to focus on 10 setups at the same time. Guys, that doesn't work. One setup is way too it's enough for you. Okay, one setup, one. And one thing you should understand is the fact that, okay, just because you have a good setup, maybe it's a day 3 reversal, it's not gonna happen every day. Maybe in a week you might find it once, in a week you might find it twice. You must develop the patience and the discipline to wait for it and every criteria to be met and execute it. When you execute it, you're gonna lose or win. It doesn't matter. It's gonna boil back to your win rate. Okay, it's gonna boil back to your win rate and your risk reward. Okay, so this is important. You might have to develop this. So after you have developed this, now you have a setup which has an edge. You know exactly what you are looking for every time you come to the market. This is now easy. I told you the graph is like this. The graph is like this. Okay, it goes down before it goes up, but once it starts going up, everything is going to be compensated. Okay, and it's going to be worth the while, with all the struggles, with all the pains that were incurred here, with all the losses, with all the time when you spend indoor. Because sometimes you realize that you're going to spend a lot of time learning, a lot of time reading, a lot of time back testing. You won't have enough time to actually go out and have time or spend time with friends. But once the graph starts going out, everything is going to be compensated. So it's just important to know that this stage does exist. Okay, where it's a lot of learning, where it's a lot of investment. Okay, and then you will see the results. Okay, so it's not something that's going to happen over time, and this is something most people actually miss. Okay, so now when you have a setup, you have your own entry criteria, and you have your developed a playbook that works for you, something you understand. Okay, something that is close to your heart, something you know more than you know your mobile device. So you know when your setup is there, you know how your setup should look, you know how your entry should look, all the criteria that has to be met before your entry. Okay, now that's when you're gonna start. You will be coming from this. Okay, but again, you might have all this thing and still be maybe at this stage where now you are only left with like you're still seeing negative even though everything is there. Okay, let's go to the second stage. Okay, the second stage. Okay, the second stage is, I would want you to now, you have your own playbook, you know what you're facing. I will say get a prop firm. Okay, I know prop firms are not here to last forever, guys. I know prop firms are like have the odds against each and every one of the traders. Okay, but prop firms can be a very good place to start from. Okay, like for instance, this is the €5. Yes, I recommend them. They are good, but there are a lot of bad things about every prop firms, and I'm going to talk about some bad things about the €5. I have the link in my description to €5, but there are some things you must understand. Okay, so let me show you why I actually prefer or recommend this. You see, you get a $5,000 account for only $39. Okay, so imagine if you say, now I have everything is working. Okay, I'm focusing on one setup, I have my entry criteria that I've tested over time. Okay, I've spent thousands of hours back testing, and now I know how my entry should look, I know how everything should look. Now I want to forward test. Okay, now you are forward testing. Okay, so I know some people will say start with a demo. I hate demos, guys. I hate demos. Why? Because demos do not have manipulations. Actually, demos are made to make you feel like you are good. That's why most people are profitable on demos. But when they go to the real world, that's where things start shaking. Okay, I told you, remember, now you have gone through all these stages of pain and stuff. Now you are here. Okay, you are just left with this small portion before everything starts falling into place. Okay, so now you are forward testing with a prop firm account. Why? Because if you're gonna be depositing $100 into your trading account, into your live account, of course, that simply means you can lose it quick. Remember, there's still a very big beast you have to face. Hence why I'm saying you are here, because the real beast hasn't been revealed. Okay, there's still a very big beast you have to face. So when you get this challenge, it's only $39. Okay, $39 for $5,000 account. But in reality, let me just show you something. It's just an illusion anyway. Okay, it's an illusion. It's an illusion. So let's say you bought a $5,000 account. You don't have $5,000. Okay, you have $500. Oh, this is interesting. Why am I saying you have $500? Because obviously they are telling you the maximum loss you are allowed to incur is 10%. 10% of $5,000 is $500. So now you have $500. Okay, now because you are gonna be forward testing. Okay, you are putting uh your strategy into test. Okay, it doesn't matter if you have been trading for a long time or if you are new. There are many people who have been trading for the longest time but still struggling. I want you to start seeing results. That's why I'm sharing this with you. Okay, so let's say for instance now you have $500. So you are gonna be forward testing. That simply means you are gonna be making a lot of mistakes. You're gonna be opening a number of trades. So one thing you have to know with prop firms, and more especially the €5 as well, even though I recommend them, but I'm gonna tell you this. Okay, one thing you're gonna realize is there are fees. I don't know why they do this, because obviously these are demo accounts. They are not real accounts in the real market. They are demo accounts, but the difference is you get paid if you pass and make money. So this is like the real market for you because you get paid. Okay, you get paid if you make real money. Okay, so there are fees plus swaps. If you are a swing trader holding a trade overnight, you're gonna pay swaps. Okay, and for every trade you open, you're gonna pay the difference in spread. Their spreads are good, but there are fees. So you might think you have $500, just to find that okay, at some point your real loss is $250 and they terminate your account. Simply because your swaps and fees have amounted to roughly $250. So when they add your real loss plus the fees plus swaps, then you have lost $500. So that's something I don't understand why they do this, because these are demo accounts anyway, but it is what it is. Okay, so that's one thing you have to know. But I will still suggest starting with a prop firm challenge because it's cheaper. Imagine if you're gonna be doing all this with $100, you lose it, you deposit another $100, you lose it. By the time things start changing, because there's a real beast you have to face that I'm gonna mention in a minute. Okay, by the time things start changing, yeah, you've already lost $2,000. That's not fair. Okay, however, if maybe by the time things start changing, you have just lost four $500 challenge accounts. That simply means you only lost less than $200 because you lost $39 times 4. Okay, so this is roughly $176 if I'm not mistaken. So you can really see that okay, this will really help you, because with $500 you have a lot of capital to play around with. Okay, you can test yourself, you can test different lot sizes, you can do this and this and that. Okay, which will actually help you. So this will help you with forward testing. And one thing I love with this, guys, is that you can start with this one, and for every 10% you make, they increase your account size. 10% they increase your account size, so you can upscale all the way to the point whereby you get $500,000 and you get a fixed payment, a fixed monthly salary of $10,000. So that is something good, but it's gonna take time, of course. Okay, but this is why I like them. Okay, even though prop firms have all the odds stacked in their favor. Okay, all the odds are against traders, but anyway, it is what it is. And this is a high stake account that I recommend. It's cheaper, but I know they have a bootcamp challenges. Like these are their bootcamp challenges. This I will say don't go for, because these are crabs. Okay, these are really crap. Why? Because they'll say they are giving you a $10,000 account, but they're gonna start you with $25,000, and then you have to make 6% of it, and then you have to you have a maximum loss of 5%. But look at the leverage, it's 1:10. This is crazy, because you're not going to be able to open a bigger lot size that is going to help you to actually reach these targets with ease. By the time you reach these targets, guys, you will have put a lot of work, so it's going to be tough. And besides, by the time you make this $100,000, now they have reduced your maximum your maximum loss to 4%. So you can see this is crazy. Okay, when are you gonna reach this? Mostly with this kind of leverage, guys. I would say this is crap. Their boot camps are crap. Just go for the high stake. It's better, because even here they're gonna say they're giving you a $2,000, a 2,000, a 20,000 dollar account. But look at this. You have a leverage of 1:10. Okay, yes, we all obviously talk about not over leveraging, but the problem here is look, the target is 5%, maximum loss is the target is 6%, maximum loss is 5%. So this is crazy. You see, when you get the 20,000, now they've reduced this. Okay, this is just an illusion to make you feel like, oh, they've reduced the profit target. No, the most important is this one. Why? Because you have to pay fees, you have to pay swaps. Okay, so with a with 4%, guys, it's crazy, because even with this $5,000 account, you won't be able to take 0.1 on gold, you won't be able to take roughly 0.1 on indices. So you can, I mean you have to take 0.0. When are you gonna grow? When are you gonna reach their crazy targets? This is garbage. Okay, this is garbage. I will tell you straight. I recommend them, but this boot camps are just nonsense. Okay, but it's up to you to decide, because guys, remember, you have to be paying fees. Okay, so here they allow you to, okay, this is a $5,000 account, but they will tell you that, okay, you don't have to lose $250. And out of this $250, the more trades you take, okay, or swing trades you take, you're gonna realize that, okay, let's say maybe you lose $50. Okay, $50 of this account, and then the fees amount to $210. Okay, that simply means your account has been terminated. You lost their whole account, even though your overall loss is 50%. You lost it because of the fees. So this is garbage, garbage, garbage. I don't know why they do this, but it's nonsense. Okay, but anyway, anyhow, it is what it is. I just want to be honest. Okay, but anyway, these prop firms will still give you enough capital to forward test with, and yeah, to actually deal with the real beast. What is the real beast we have been talking about? Okay, okay, the real beast now, it's psychology. Okay, it's gonna be trading psychology. Okay, because when you have an edge, when you have your entry criteria is defined, you have your own playbook. The only enemy now is gonna be you yourself. Okay, because now you will realize that, okay, the only thing you have to do is to trade one thing over and over and over again. Okay, and it's the same thing that you did when you were back testing with maybe a forex simulation. Okay, but now, because you are coming to the real market, you are gonna like start feeling scared, start feeling fear. Oh, winning, start feeling overconfident. Now you want to take a bigger lot size. Like, you're gonna be exposed to all the psychological problems, okay, that most traders face. Okay, so this is true, this is reality, it is what it is. It is gonna be like this. Okay, so you must just be well aware before it actually happens. Why? Because it is gonna happen, guaranteed. Guaranteed, I repeat, guaranteed. Okay, it's gonna happen to you. Okay, so once you defeat this beast, I always recommend Mark Douglas, Trading in the Zone, or The Disciplined Trader by Mark Douglas. I also recommend a book by called Trading Psychology for Dummies, and there is Psychology 101. Like, there are many books about trading psychology 101. There are many books on trading psychology that will help you, and it is after defeating the psychology enemy, which is yourself, when the graph is now starting to change, and now you're executing one thing. And remember, I told you, with time, everything is going to fall into place, and by the time you reach your third year, now you are able to take a bigger lot size. By the fifth year, you are taking the biggest lot size. So even if it's still, your target is still 50 pips, okay, like I do, even if your target is still 50 pips, but the difference is going to be that, okay, when we are here, maybe you are making, I'm just giving you an example, maybe you are making $100 profit, okay, for 50 pips. Okay, maybe you're taking a lot size of 0.2. Okay, for 0.2, that simply means 50 pips by 0.2, you're roughly gonna get $100. But the difference is gonna be, with time, now you're gonna take a lot size of 10 and still be taking 50 pips. Okay, and now you can see that now you will be making hundreds of thousands of dollars, you see. But this is gonna happen with time, okay, with time. As the graph starts picking up, your experience level is picking up. Now you are confident, you're taking bigger lot sizes, your account is big enough to accommodate those lot sizes, and those lot sizes actually is a very small risk, maybe a 1% risk of your overall account. Okay, so that's why this journey is like this. It starts by going down. So there are many people who are here, okay, and they think like, oh, everything is going wrong, everything is going wrong. No, it's nothing is going wrong. This is normal. This is why most of the time I will always say, go and watch Peter Branded, go and watch Peter Branded, go and watch Peter Branded. The reason I always push you to watching Peter Branded is because I know one thing about Peter Branded is the fact that he will tell you how his first 3 years were a disaster, despite, I repeat, despite him actually working on a trading floor with the best traders in the world. Yes, they did influence his overall trading journey over time, and he actually is grateful for that. But one thing you will learn from him is the fact that his first 3 years were disastrous. Why? Because there is this phase here, and there's just a lot you have to discover. Okay, so if you're still trying to replicate something somebody is doing exactly the way they will do it, then you might spend a lot of time struggling. But when you really decide to put in the work and decide to do things right, you're gonna see your journey is gonna be very smooth. Okay, that's why most of you will say, hey, you are explaining somebody's concept in a better way. Hey, this is better, this is easy to understand. No, it's not that it's better, it's not that it's easy to understand. It's because I learned from people, and then I had to go and put in the work, come up with entry criteria that help me, that I understand and know exactly what I am personally waiting for. Okay, and then again come up with exit strategies that work for me, Okay, so it might still be the same strategy, but you're gonna add something here and there. It won't be the same thing overall. Okay, so yeah, you must come with something that is really better. And then let me just take you through let me take you through this strategy that I use. Okay, actually, okay, sorry, I actually have it here. This is the most explosive trading strategy for indices, and I'm gonna take you through this week alone. Okay, and as I've already said, I'm just trying to help you understand. Okay, so as I've already alluded, guys, on this strategy, I have roughly four criteria. The first criteria is to see where trap volume is. I want to see where have they trapped volume. Okay, and then I want to wait for the equity to open. I want to see trap volume during the session itself, and then I want to see an engulf that shift zones from trap traders, and then I want to target 50 pips in and out. I don't care, but most of the time my 50 pips gets hit in less than 10 minutes. Okay, that's why I've actually started adding this strategy to the playbook, and I'll be done in a week or two, guys. Honestly, it's a lot of work. I want you to understand this, but still, when you understand this, go and back test it, go and put it in your own way, refine the entry criteria, refine this here and there to a way that you understand better. Okay, I'm not going to talk about last week and Friday because I've already spoke on Monday, because I've already spoken about last week, and Friday was a holiday, bank holiday in USA, so we know there was less volatility. Okay, so let's go to Tuesday. Okay, of course, on Tuesday we didn't really see where trap volume were, because as you can see, this is the closing, this is the low, but it made a lot of sense because we were coming from an inside day, which is from a holiday. Okay, so what do I want to see? I come to a 1 minute time frame. I always tell you that. Okay, let me go back to a 5 minute time frame. I always come to a 1 minute time frame. Okay, and there's a reason I do that. Okay, and that reason is actually the fact that on a 1 minute time frame, I'm gonna see everything clearer. Everything is gonna be cleaner for me. I've already shared with you this trade in my recent video, and I've sent you proof of where I took it. Okay, so as you can see, I want the equity to open. The equity opens here. Okay, then I just tick, this is my criteria, and then I want to see trap volume. I want to see something like squeezing. If you watch my recent video, I shared with you what I mean by trapping. Okay, so as you can see, I told you here, they just squeeze people on a triple top. They broke down. You see, they gave this last pump, then a dump. Okay, this is a good entry criteria. I told you I took this trade here, somewhere here, and then I misplaced my stops. They closed me here, but I re-entered immediately when this candle broke here. And then my 50 pips were hit very, very quick, because my 50 pips were hit somewhere around here in 25 minutes. I told you, these were trap traders. It's just that when I entered here on this engulf, this is an engulf that shift the zone, but it was a 1 minute engulf. By the time I punched in my entries, the candle was already here. Okay, so this is what I wait for every day. I wait for trap volume and an engulf that shift the zone from trap volume. Okay, so once they made a high, they broke out of it, and everybody whose entry got fulfilled here, everybody who bought here was relying on hope. And I told you, I want to see those relying on hope. When I see people relying on hope, already I know that, okay, it's gonna be a good entry for me. Why? Because the market wants to trap you in a place where you are now relying on hope, and then they are gonna punish you. Okay, so this is my most explosive trading strategy for indices. Okay, if you look at this entry criteria, everything it's very easy for me. 50 pips is gonna be hit. I don't care if I'm taking a counter trend. I don't care if I'm going in line with the trend. Okay, because these are explosive, and I understand that mostly you're not going to see a drawdown and you're going to go straight into profit. But guys, I wouldn't have came to understand this or came with this entry criteria unless I have put in the work just to see what happens most often. And I told you, if you don't understand, sometimes pray. God is real and he will help you understand things in a better way. Okay, so I always say that. Okay, and that is really true, the truth. Okay, so somebody will come and say, hey, you explain somebody's concept in a better way. It's not that. This is what I came with when I was back testing. Okay, this is what I came with when I was doing all the work, and you will realize the simplicity. Okay, go out there, you won't see anyone talking about things like this. Okay, it's because I put in the work. I had to come up with something that I understood better, something that works for me. And now, if I can tell you truthfully, US30 has became my best pair to trade, my best index to trade, because it happens like this almost every day. If you go to Wednesday, I don't care about the entire day. Okay, uh, go to a 5 minute. This video is getting too long, guys. I will make a different video on this. Okay, if you go to let's go to Tuesday. Okay, they've trapped volume up there. Okay, they've trapped volume up, and then the equity opens. I told you, I want to see trap volume. You see, this is where the candles open. I don't care much about pins. You already know. Okay, you see this. They're taking prices down. Volume is trapped before the session up there, so I know they might likely not go back to the top. Why? Because they have trap volume. But look here, all of a sudden they start squeezing, and then what do? This is trap volume. I understand that when they break out of this trapping, they are gonna punish the guys here, and I don't know who is gonna get punished until they break out of this and they shift the zone away from all these things. So what do? You wait patiently. Most people blow their accounts here. Give them time to trap. Okay, give them time to trap. Allow them sufficient time to do the trapping. Okay, it's highly important. So when they broke out here, I knew that, okay, everybody whose order got fulfilled here, okay, is now relying on hope when this candle closes. Remember, once you find yourself relying on hope, you're not going to close the position. You're going to be praying to God, may prices come to break even so that I can exit at a smaller loss. And then they're going to punish you. Look at this. They go to 50 pips in 11 minutes. This is going to happen always, and it happens always. How did I come to understand this? I put in the work in back testing. As I was back testing, I then realized that, oh, this is happening over time. Okay, if you go out there, you will not see anybody explaining these things like this. Why? Because you need to come up with something that resonates with you, something that you understand better, something that will be like your best kind of setup. It must happen much often. I now know that, okay, if I wait for this, yes, there are some times when this candle is gonna close and I'm gonna trade this and I'm gonna get a rarer track and they're gonna go reversal. But I know that if I take the same trade 10 times, this is gonna happen roughly maybe 6 times, 8 times. Okay, But for me, I want to say 6 times because I don't want to put my mind to the belief that, okay, there's a strategy that can win 8%. No, I want to understand that if I take a loss, it's fine. I'm taking a loss, okay? So you see, there are times when this will close. I wait for it to close. There are times when it closes because I execute it maybe when there's 2 seconds left. I know that sometimes they will close this candle. I take a trade. They give me rudder tracks and go down. Yes, it's still fine. I lost it, but my entry criteria is still the same. I'm taking the same thing each and every day. You go to Wednesday. You go to Wednesday, same thing transpires every single day. But on Wednesday, there was a difference. You see, I spoke about this. Wednesday, they didn't give me a good setup, okay? So I didn't take the trade here, but I took it on another index. But look at this. I told you, if you get two trend lines and different levels, this is an explosive kind of trend. You don't want to be going against it. I did share all these things with you guys. Anyway, I think the video is going too long. It's 50 now and I will have to end it. I'll make another video, guys. I really appreciate you, but this is explosive. You don't want to be going against it. The same thing happened yesterday. Or let me just show you. The same thing happened yesterday. Okay, this is Friday. You see, they take prices up. They trap people here. They don't give a very clean engulf. They shift the zone, as you can see. But we wait, okay? Then they give this. I've explained this countless time. Go to my community, you'll see a lot of trades that I took following this, okay? In my recent video, I explained this kind of trapping, okay? Go and watch the recent video before this one. You'll see everything. Now they give this last pump, they break out. This is where I take my trade, and 50 pips is hit in no time. You see, 50 pips in 6 minutes. Guys, I appreciate you. Thank you.